So let's take a look at the stock market in here and take a look at our, we'll call them revised cyclical patterns that we think have a lot better information on them now that we have had this market bottom come in. So there's some great information in here that we learned off of this Tuesday bottom. So first of all, I want you to note that the support at the 89-day moving average right over here was solid. You had the same thing happen here last Tuesday on that big downside day. And this 16-day pattern, there's a 15 right there, 16, 16. You could see as we've recounted it and reset those patterns, that's really where the cycle is. And it showed that to us this week as we knew that we would get some sense around these lows as to what was the dominant pattern. And there it is right there. So this rally right in here comes strongly at the bottom of as an intermediate pattern of high risk. That period of extreme risks that we had labeled had ended. And so the amount of decline in there was shockingly low. That the market was this strong, and then you get this strong rally, very close to the all-time highs again, and that shows you the strength. So that if that's the case, and we believe the intermediate pattern is now in an uptrend that we think has got some weeks to go, then you really have this kind of a channel or pattern going up right in there that you can see. Now, the way this pattern looks is that this is a 16-day cycle right there. And this is the 9th day off of that low, 9th or 10th day. So that says to us that we have about 5, 6, 7 days of correction in here. We're going to call the time that we're away these next couple weeks down and then up. You can see that. That's really what we're looking for. So we don't think that we're going to take out the highs on this one. We think we're going to challenge or maybe just take out the highs on that next one over there. And then this is like a 3-4 week period in here. And we think overall that probably is going to be the end of it. We don't think that there's a big upside breakout coming in here, but just some really choppy period where the intermediate phase runs itself out and runs into a longer term corrective period that we think is going to hit hard in the fourth quarter, as I said earlier in the show. So we're going to call the next 2 weeks down for a week and then up right over there, and that probably is challenging or taking out the highs. Were this correction to be more shallow, then you'd expect this to be a little bit higher. Were this correction to be much steeper while we're away, which is not likely, then it would set up a more negative pattern like this. So you can learn a lot about that. Right now we consider this to be the buy zone over the next week, 24.57 to around 24.48 down here, as that's some really good support. When you look here at the in this corrective period, you can see we turned red, but now the S&P 500 has turned green. You can see that right there. So showing you that the momentum has reestablished to the upside. NASDAQ NDX has done the same thing. The Dow Jones Industrial Average has done the same thing, though overbought. You can see that they have gotten overbought. So that's why we're looking for the pullback. SPX very overbought when you look at that. So we're looking for the pullback in the next week. The Russell, you can see, is the only one that has not turned green yet. And that is overbought also and rolling over. So, pretty good sign that the next week could bring some downside corrections in there. And again, we like that buy zone. Take a look at the Russell, and here you could see the Russell has stalled here in this resistance area, and this is the real weak sister in there. As far as that goes, though it's had a big recovery in this last week, it still is only in that area, which shows you that it is the weakest one. Still, there's that pattern. It says for a week likely pulling to the downside. When you look at the NASDAQ NDX, you could see the same thing, gets up to this cycle peak resistance and a new high. So the NASDAQ is the only one that's made a new high, but when you see that happen, it pretty much gives you a sense the S&P 500 is probably going to do the same thing. Again, we think it's after the correction and then the next rally. So you can see the same pattern right in here. And we, again, think that if you get a pullback in here over this next week, that it's going to be a buy. Certainly if it gets underneath this rising support zone around 5,900, that would be a pretty good size pullback in there. That rising zone is probably a little bit higher right now because we made the new high. And just a little free peek here on the weekly. You could see that weekly turning up, and it's just the first week. And usually when you get that, you have more to come. So we believe that it's going to have several more weeks, and that's really what we're projecting in here is a corrective week. And then another up week following that. And the short-term momentum, they're overbought. It's likely to get a pullback, and that's probably going to be a buying opportunity for the short-term traders. One thing I want to bring in here is our MCI, market condition indicator, because I was trying to show this the other day and I couldn't quite get it pulled up. There was an error in the script that I had to fix. And so for our level 4 members, they get our market condition indicator, and you can get a little lesson off this right over here, and that was very clearly the Russell was the weakest, and you could see in here that weak move right in the indicator getting down here to like minus 90 something. Now the key is that if it's really strong and there's no major breakdown, you come down in between the 25 and minus 25. We call that the swing zone. And if you do that and you move back up out of the swing zone, it did it there in the S&P 500. It did it in the NASDAQ. The Dow couldn't even get into the swing zone and then turned up again, but the Russell was clearly the weakest. Man, you get a ton of information out of this, and what this all means is that the intermediate and longer term momentum factors that are built into here were still positive, and that they were not giving ground, so you were just having a short-term correction, and then you get up above the swing zone, and that confirms when you get above the 25 again that it is a resumption on the upside, and that's clearly what we have. So this works on everything, and you have to become a 3-month level 4 subscriber and get our charts in order to be able to get that. So that just shows you the super strength in the MCI that matches this right over here, which is the looking at the slim ribbon, which shows you the intraday strength and how that strength and weakness, and how interestingly when it turned up over here, which was on that Tuesday, this turned up actually on Monday, that there was some sign that we were getting positive again, and you can see the intraday momentum right in here. So all of the intraday indicators in momentum on the stock market and the market condition indicator all showing that pretty good strength, and the fact that the MCI turned up where it did shows us that the longer term factors that are built into it are really strong. I hope you enjoyed that video. Be sure to subscribe to our YouTube channel, and also go to askSlim.com and become a level 1 member. No cost to you, and we have some special videos for you to see. I know you'll enjoy them. I've been